Let's get a move on and focus in on the furious rally that we've witnessed within the commodity space. Let's decode the commodity super cycle, if you will, and find out how long the commodity bull run is here to stay. We've got our guests as well joining in on the show. There's Peter McGuire, Chief Executive Officer at XM Australia, as well as Rakesh Arora, Managing Director at Go India Advisors. Good morning, gentlemen, and great to have you on board. Peter, going to begin with you. We have seen quite a ferocious rally play out in ferrous metals. Are you of the view that this rally has accelerated since the supply side reforms have been announced by China? And what are some of the implications of this announcement that you think it could have on the global steel supply and demand situation?
Well, good morning. A couple of things. First off, I think the world is going to surprise everyone as far as how engaged they're going to be with infrastructure spend. So it's going to be a rebuilding or incredible construction across the globe over the next decade. So there's the first part. And as people's needs and wants change, then this is becoming so evident from everything that we do as we come up the consumption curve. So yes, I think first off, the demand picture is going to be, even without China's growth, we're going to be very, very strong numbers globally for the rest of the decade. The second part of the point is, as far as prices are concerned, yes, we're at historically, high prices, but I feel as though that there's even more upside yet. We've seen that demonstrated with that fall off as far as US dollar in the short term over the last 6 weeks. And that's been very evident across nearly all of the commodity base, which was so heavily sold off in 20, as we know, due to the global COVID situation.
Rakesh, morning. Let's get in your view. It's supply side issues or demand improvement. Which side of the equation, according to you, seems to be triggering this bull run?
This is definitely demand side. China normally, picks up demand whenever the world is going through a little bit of crisis. And this has happened over and over again in the last 2 decades. And same thing happened when COVID struck. China has been the savior of global commodities market. But this time around, unlike the previous bull run that we were seeing pre-global financial crisis, we have a clear visibility that most of the governments are looking to boost infrastructure to push demand. So that gives us a clear runway for commodities, rally to last longer. This doesn't mean that commodity prices will continue to go up, but higher for longer is the theme that is going to work out over the next 1 to 2 years.
Peter, a little intrigued as to what's happening with copper. I mean, the decarbonization and the clean energy push has been around for the last 5 years. Then why this sudden spike in copper prices? What's different this time around?
Well, we got sold off so heavily down to $6,000 a metric ton, and it was just, there was no dollars spent as far as capex. All of the big miners were absolutely hemorrhaged. There wasn't the demand side there, and then all of a sudden, as Rakesh mentioned, that whole momentum has just changed and it's galloping ahead. First off, the US dollar has fallen so heavily from those high numbers of 103 down to 90. The second point is, we've got global demand from everything that requires copper, and traders have bid it up so strongly. We've got copper. It's given back a little bit of the gains that we saw in New York overnight. We're now at that $4.75 approximate a pound, $4.75 US a pound. We've got, as far as LME, you're running at about nearly under 10,400. But you look at it over that period of the last 5 weeks, and it's just been parabolic. So the market's been up 22% in that period of time. Will it continue? I think the jury's out, but everything goes up and down and it has cyclical moves. And at the moment, that momentum has been very, very strongly bid up. So I look from a trading perspective, don't get in the way of a bull market. If the market's showing fundamentals, technicals, and the seasonality approach, that all of that is aligning and you've got a falling US dollar, then you've got to be long. Don't ever bet against the market.
Sure. Rakesh, India did not, import too much of Chinese steel. But nevertheless, what's the impact of China steel reforms you expect on Indian steel companies and how the pricing is likely to pan out thereof?
See, steel is a global commodity, and China, accounts for 50% of its production and consumption. So anything happening in China has a major bearing on steel prices globally. So this 13% reduction in export rebate is actually a sustainable increase in steel margins for all global steel companies, including Indian steel companies. So this is something which is a new development and market is going to factor in. And that's a permanent shift in the profitability. So it augurs really well for the Indian steel companies, going forward.
Okay. Peter, now the US stimulus, that's played a role, of course, in the rally, if fully implemented. What's the kind of, impact we could see across the board on steel, copper, aluminium of the giant infra plan and the infra boost that they have in store?
Okay, first thing, what we experienced yesterday as far as those numbers coming out of Singapore, I believe, Arbor, they're at all-time highs. So there's the first part as far as iron ore. Secondly, the numbers coming out of, and this is the issue as far as COVID, the numbers coming out of India are dire, and our hearts are with you all over there, to your nation, that you bounce back far quicker than anywhere else. But the American numbers are down 90% as far as infection. So they've obviously turned the corner and turned the corner quickly. And now you've got all of that surplus horsepower that's being put to play. So local governments, you've got state governments, you've got governors over there, everyone's on the onward and upward. Unemployment numbers are falling, non-farm payrolls, while they were a little bit disappointing in the last read last Friday, they're still fairly strong if you're looking at what's happened since January. So that overall demand, the issue I think facing all of us in the foreseeable future is the inflation story. But let's not get to that just yet. The demand is very, very strong. America is going to build its way out. And I think that's going to lead a lot of nations copying their mantra. So stimulus-led recovery, strong demand, good time to be a miner.
Absolutely. Rakesh, in previous bull runs, have you seen higher commodity prices derail the kind of infra or construction related demand that's possible here in India?
In India, I don't think so. But, thinking globally, as I was mentioning that, if you have to look for direction for commodities, it is China where you have to look at. And when China and world tries to grow together, there's not enough commodities available. In the last decade or so, there's been underinvestment into mining sector because commodity prices have been very low. So the returns were not there and mining companies were not really investing into expanding capacity. So today, when the situation is that China is ferociously growing and importing left, right, and center, and you have visibility that US and other developed economies, including India, are also going to grow very fast. So clearly, commodity prices are going to be much higher than what they were in the last decade. But coming to inflation, I think what really matters is inflation in China, not rather the inflation in India. If inflation in China does pick up, then Chinese government is going to pull back on the stimulus. And that would really mean that there will be a lot of mini cycles within the larger commodity cycle that we are seeing. So probably, we might see dips in commodity prices extending up to 20-30% or more. But generally, I think, inflation will take time to trickle down to finished products. So currently, as you've seen, that steel prices are up like 2x in India. But the proportion of, steel prices in CPI index is very minuscule. Whereas for consumer products like car or two-wheelers or tractors, they have a much higher weightage. but we haven't really seen large increases in final product pricing. And this is because, demand is still low and weak because of COVID-19. So they're not able to pass on these high raw material prices. So I think inflation impact will come, but it will come with a bit of a lag when the economy is totally heated up. Probably it is like 9 months away from right now. And as I said, that Chinese inflation is the one number which you have to keep watch on, because that will have a much higher bearing on which way the commodity prices go.
That we will see this inflation impact sort of play out with a lag, and that the Chinese inflation needs to be closely watched out for. What's the sense that you're getting in terms of this overall, companies and, really coping with this high raw material prices being passed down? Peter, that question was for you on the inflation impact with the lag and the overall Chinese inflation.
Well, do you believe the numbers? I mean, when I'm seeing numbers, and I look at the inflation numbers coming out of Australia, and I don't necessarily believe those, because everything that I'm buying is up 10 or 15%. So there you've got food price inflation, you've got fuel price inflation, huge property price inflation. This is all over the last, say, 9 months. Now, as far as China's concerned, the numbers are always greeted with a great degree of skepticism. So let's review those in the next couple of months and see if there is an issue that they're putting hand on heart that the inflation number is an actual X. Second part is, I think that will be that contagion effect as far as inflation will impact the world, and you can't stimulate with trillions and trillions and trillions of dollars and not get a result. So that's the payoff as far as that increased global stimulus and what impact that's going to have to inflation. So I think over the next couple of quarters, it's going to be interesting, and 22 will be a fascinating year, to say the least.
And Rakesh, as you were talking about earlier, there's that clear visibility that most of the governments are boosting infrastructure in order to push growth. How are you looking at the efforts been taken by the Indian government in particular, and how this is going to impact the overall metal space?
So Indian government has a clear plan, and they have identified a national infrastructure pipeline where they have added projects worth, I think, more than 100 trillion rupees, and those projects are being monitored for execution in time. So that is one. The availability of projects is already identified. Number two is that in the previous budget, they did try to solve the issue of funding, and have constituted a new institution, DIF, which is on the lines of what China has, where this institution can go and borrow from the market and fund infrastructure assets. So funding issue they have tried to solve apart from the budgetary allocation. And thirdly, I think given the way state governments are going ahead of elections, I can see the visibility in a state like UP, where the elections are due in 2022. They're going hammer and thong to complete projects despite COVID. So I think there's a good visibility on infrastructure, and the government has tried to solve problems. And you must have noticed all these reports on the fastest construction of road per day is increasing every month over month. So I'm pretty hopeful that infrastructure is going to be a key driver for Indian economy over the next 2 to 3 years.
Okay, let's get a move on then. Thank you so much, gentlemen, for joining in and sharing with us your outlook on the commodity space, the rally, the China factor, inflation, government efforts, prices, and lots more. That's the view coming in on